Yo, hello. Alright. Guys, I do not want to bore you guys. I did notice in my previous videos, you guys leave like 2 minutes, like into my video, like you guys don't care. It's not cool. So I'm gonna be a little bit more entertaining. I don't know, in a way. I don't know. Uh, I don't want to bore you guys with information, right? I sometimes don't know what I'm talking about. I try to learn and just throw out there into your guys' world. See if you guys could catch a little understanding, something just a little entertaining, right? So last Thursday I made a video on non-farm payrolls on why it was important in today's market, right? Let me just do a little quick summary. So non-farm payrolls was very important in today's market because we do not want a strong labor market was trying to ease down inflation. That is not something we want. So high labor market means more money to the economy. More money to the economy. Prices stay the same. Even brings up prices all crazy, right? Uh, we wanted 155 employment report. We got 256. Crazy jump, right? We wanted unemployment at 4.2 or above 4.2. We got below, right? That means less people are unemployed, which means it's a strong labor market, which is why the stock market did beep boop bop boop, right? So it went crazy down. Now the next important information coming out. Please just stay, watch the video. All right, we're not even like minutes in. All right, um, would be we have CPI and PPI. Producer price index. So producer price index that just tracks businesses, what businesses pay for goods and services, right? It's like business to business inflation measurement, right? So for November we have point 0.4. For December we want point 0.3. So if we get point 0.3, that's good. That means what businesses pay for goods and services aren't going up, which wouldn't affect us in the future, because in my opinion PPI only affects us in the future, right? For December, if it comes out, if point 0.3 comes out to point 0.5, it's affecting us now, and we'll see the effect on January's report on February, if that makes sense, right? So point 0.3, we get point 0.3, point 0.2, that's great. That means we're not getting, us as consumers aren't getting hit as bad. Let me just give you some examples of PPI, right? Let me just give you some examples of what PPI would be. So it'll be stuff like raw materials, lumber, steel, crude oil, right? Another thing, intermediate goods, fabric for clothing manufacturer, car parts for automakers, finished goods sold to retailers, packaged food and grocery stores, electronics for retailers, service providers to businesses, transportation and shipping costs, warehouses, storage fees. It's like a little rap battle. Now, in my opinion, the most important measurement that's coming out would be the consumer price index. So we are, previously November we were at point 0.3. Now we're forecasting a 0.3% again. Well, this is bad if we do get point 0.3, only because it gives the Fed, the visualization that inflation is elevated. It's staying the same. It's not going down. It's not going up, right? Which is something the Fed doesn't even want. CPI year over year, 2.7, 2.9. Now that's a little jump, right? Uh, but month to month basis, I mean, it's elevated. It's not going down, and especially with very hot labor market, this is not what we want. If we get point 0.2, I'm telling you, markets rally only because we're gonna keep our expectations that the Fed is gonna cut 2 rates and not just not cut anything at all, or even bring hikes into the table, which is something we definitely do not want. Now, guys, if we do get our consumer price index above point 0.3, the chances of us cutting rates are pretty. The chances of us raising rates, so rate hikes, it's pretty much on the table. And it's something we definitely don't want. So let me give you examples on what CPI would be. It measures prices at consumers levels, right? Business to consumers. So CPI affects stuff like housing, rent, homeowners costs, food and beverages, groceries, dining out, transportation, gasoline, public transportation, healthcare, doctor visits, prescription medication, clothing, shoes, apparel, recreation, movie tickets, streaming services, education, tuition, textbooks, and whatever this is, haircuts, personal care items, right? So those are examples of CPI, right? That goes up. we pay more. Inflation keeps going crazy. The chances of us not cutting anything at all, and maybe raising uh, a rate hike, maybe implementing rate hikes are pretty. They're on the table, and I say that only because I mean, Yahoo Finance article, December jobs reports has Wall Street starting to talk about rate hikes in 2025. Just talking, right? Who knows? Wednesday CPI comes in hot. The chances of us even pricing in a rate hike is pretty determined, right? And that is something we don't want. And the next Fed meeting, I think it's January 29th. Um, January 28th, 29th, that will fall on a Wednesday. So it will be the 29th. So January 29th, do not expect me at work. For those that do know me, I am not coming in that day. And there's very few that know me or even know I post videos on this stuff. Only because I do not want them, like, oh, you don't know what you're talking about. Because I don't. I mean, I do. I'm learning. I might be wrong, might be right. There might be some analysts that's more, into this world than I am. But at the end of the day, I'm learning, right? And the fact that I'm learning just means that I'm trying to be better, right? That's what that means exactly. So, guys, once again, for CPI, we don't really want point 0.3. We want below point 0.2. If we get point 0.3, the chances of us just cutting rates but delaying them are pretty high. If we go above point 0.3, the chances of us not cutting anything are on the table, and the chances of us hiking rates, 20%. I mean, Wednesday we might even see people just say we might raise, right? Or they're pricing in, and then the thing about this, right, is the thing that I am more into the reports that are coming in on Tuesday and Wednesday is how uncertain the markets would be and how much they're looking for this next meeting. With these numbers crazy, right? If we get point 0.3 or point 0.4 or point 0.2, you know, the market not knowing what the Fed is gonna do, it just makes a big, we might see everything all over again from December 18th when the Fed gave a ugly outlook for 2025 and 2026 with rate cuts, right? So yeah, right. So if I mean whatever the numbers come out to, the next Fed meeting is going to be as important, in my opinion, as December 18th when they gave the outlook. So that's one really cool thing. That's why I'm not going into. We're going to 29th, and I hope you guys are still watching, right? And you guys are a little bit understanding of what's going on. Um, yeah. So I am going to be looking at Wednesday's CPI and Tuesday's PPI, but I am mostly looking for the 29th. Now, to think about the 29th, aftermarket, I think Tesla reports on the 29th. Let's look at the daily. Yup, Tesla reports on the 29th. I don't think Nvidia, I think it was Netflix reports on the 29th as well. 21st, while Netflix is almost reporting. I think Netflix is a buy at 800. That's what I do think. But yeah, guys. Also, now for those not watching, right? I just really wanted you to watch the first 5-6 minutes of this video, and hopefully it wasn't boring. Let's go to Weibo. Now I was looking at this article. Give me a second, guys. Don't leave me. So insurance stocks tumble as LA blazes among most costly wildfires. I could have made a lot of money. I'm not gonna lie. When everything that's happening in California, you know, God bless them, take care of them, you know. But Tuesday, I was looking at insurance companies that were based in California. Now I was looking at ALL, Allstate, but Allstate wasn't doing nothing on Tuesday or Wednesday. So I was like, you know what? Why even get in, right? I was like, nah, I'm not gonna get in. I don't even want to get in. Da da da. This was Tuesday. This was Tuesday, and then this was Wednesday, right? We had to drop on Monday, and then right here on Wednesday, I was like, nah, there's really no reason. The stock is going back up. It's going to stabilize. Da da da. So I didn't get in. And then the next day, I mean, 191 to a low of 176. I mean, look at this contract, right? These contracts went flying. So on the 10th, I mean, they were low. I mean, guys, look, low of 14 bucks, 25. If you bought 10, let's say you bought 10 at 25, that's a $250 investment. Even if you sold right here, you would have made 2,290 off a $250 investment. If you sold all the way up here, 3,600. The most crazy one though was I want to say AGI or MCY. Let's see, MCY. Yes, MCY. So let's look at the five. So since Wednesday, ACY went from 64, and I mean it just went crazy. 12 bucks all the way down in the red. 60 bucks, and then it closed. I mean it went all the way down here. Yes, I get it, but then it did close at 49. So the 40 puts. I mean look at this. It's crazy. A low of $3, $7, $10. So let's say average fill was 10 cents, about 10 contracts, $100 investment. Sold all the, I mean, we stable up here. Sold all the way at 300. $100 netted you $3,000. That's crazy. I don't know why that's so crazy to me. But obviously, I didn't get in. I was too scared. Guys, I am reading a lot of books on investing better. Be less fearful. Have more conviction on your plays. Stop listening to news that would scare you. Delete memory, delete bad memory. Try to overcome negative energy. So that's just bad experiences you had. Don't let those ruin your next trade. Uh, but yeah, once again, if you guys saw this video, thank you. If you didn't, whatever, one day you will, and I will profit from you. What I'm saying. Um, yeah, guys, CPI, PPI, very important, and January 29th, super important. Bye.